On this episode of the Stock Market Playbook, we've got Angie Setzer, who is a commodities trader. And this is a wild episode. This is something that we all use and consume and are involved with every day. And we know very little about the back end and how the commodities world works and commodities traders work. So this is super wild. I think you're going to love this episode. Enjoy my discussion with Angie. Okay, Angie, thanks for joining us for the podcast today. We're excited to chat some markets, get your take. There's a lot of interesting things happening right now, and I'm anxious to dive in. So there's much to discuss. But before we do, give us a little bit, for my listeners, tell us a little bit about yourself, where you come from, how you got to where you are.
Yeah, well, I am Angie Setzer, of course. I have been trading cash grain, physical grain now for 21 years. I started in January of 2005 and started just basically, I had no idea what I was doing, honestly. I grew up on a farm. I grew up with the agricultural background, that sort of thing. But I was told throughout all of school I'd be a good teacher. So I just went to college to teach, honestly. And shortly 2005 timeframe, 2004, 2005, when I graduated college, there weren't a lot of teaching jobs out there. And so I was just kind of got into sales and some of these other things and really ended up landing into a position that I had no idea existed. I was a cash grain broker. And my first day on the job, basically the owner of the company handed me a list of about 150 farmers, just names and phone numbers, and said, give them a call and tell them you can pay them $1.80 for corn picked up. And that's what I did. I just started and didn't really look back. I spent about 6 years doing that before I got lucky enough to come into the elevator side of the business. So I'd always just done the buy from a farmer, sell to an end user, kind of act like a matchmaker in grain or whatever. And so in 2011, I became the vice president of grain for a chain of elevators in the state of Michigan here, and kind of learned how the physical space worked and really worked to build up their handling, kind of married both of the gigs, the brokerage side and the physical space side. And over the 10 years, next 10 years that I was there, I built up our handling from about 3.5 million to about 15 million bushels. And then in 2021, I'm actually about a week out from the anniversary, July 1st and 21. I started Consys, my own consulting firm. Basically, I just took what I had learned on the physical side of things, the managing space and all of that. I had a group of farmer customers that I was working with, and asked them if they'd be all right with basically me piecemealing together sort of a merchandising role for them. And over the last 5 years, I've kind of just continued that role. Built up a pretty solid group of folks that I'm working with, and now have about, I would say about 60 farmer customers that I work with and a handful of small agribusinesses. I originate for a hog feeder. I merchandise for a cooperative here in the state, do some other helpful origination and merchandising sort of insight for some other feeders and things. And so, yeah, I'm a busy. And then in my spare time, I ended up doing some market analysis. I really love to explain kind of to the world how the physical space and what is going on in the physical realm of the grain markets will influence futures and things like that eventually. And so, yeah, that's a bit about what I do, or what I've been doing anyway.
That is super interesting. We have had some commodity traders on the show before, and I don't think any of them have operated in the physical
Right.
world of the commodity that they're trading. That's wild. So you obviously you're watching the grain markets or
Mhm.
grain futures trading. You're looking at that side of things, but you have this like deep history, this all this experience actually working with farmers and brokering grain deals between them
Yes.
and end users. What's a typical end user? Are we talking like are some of the larger food
Yeah. Yeah,
uh
we've got, so like right now I'm working on, depending on where you're at, it might be more of a regional thing, but you've got your Jiffy mixes, I know Kraft isn't, Nabisco, Triscuits, which I'm a big fan of. A lot of people will say So you either love them or hate them, and I think most are in the latter camp in that one. But I am definitely in the former. They're made of white wheat, so we have like our crafts, our Nabiscos. We've got a few wheat mills that I work with that sell directly into General Mills and Kellogg's and Battle Creek. I'm here in Michigan, and so we do have a
Yeah.
handful of those. On the grain, on the corn and soybean side of things, as I handle all, I do white wheat, red wheat. I trade white wheat, red wheat, corn, soybeans. We got some specialty soybean programs that we're involved in, some of those other things. But on the soybean side, it's more of your ADM style, Anderson's, Zealand, Louis Dreyfus, like those big, your ABCDs or whatever. On the corn side, it's more in the way of feeders, folks that are feeding cattle, ethanol plants. We do have a small amount of kind of export business. We're a peninsula here in the States, so a lot of our stuff gets, if it leaves the state, it's getting railed out and going elsewhere. But yeah, our end users pretty much vary from, it could be Joe Farmer with a few hundred head of cattle, all the way up to, like I said, a Louis Dreyfus or an ADM, or one of the big dogs that are going to send it overseas.
That is super interesting. And how has the physical world and the operations there influenced how you look at, say, the futures markets for grains and
Oh
these basic
man,
commodities?
yeah. The biggest thing is just kind of understanding or trying to recognize farmer psychology and what it means for trade throughout different parts of the year. Um, we saw this, probably one of the greatest examples would have been like last harvest in the corn and soybean market. To me, throughout September into October, it was pretty obvious in the physical space that we didn't have the flow of grain that we thought we would, right? Like in physical grain, you have basis, which is the difference between cash price and futures. That's really a function of your local supply and demand. It is, what it takes to get grain moving in a specific area or whatever. You pay attention to basis. We watch spreads in particular. Spreads tend to influence more commercial movement, whether you're getting paid the amount of money you need to be paid in order to carry that grain forward, and some of these other things. And so for me in the physical realm, it was pretty obvious last year when I was working with customers from across the country, when I'm working with, my own entities that were either, whether they're farmers looking to market grain into the pipeline or end users looking to buy grain from the farmer. You could just tell that, when it comes to physical space, physical grain, and harvest time and some of these other things, like all of this stuff happens very quickly. It has to happen very quickly. If weather allows it, I should say. There are times when it's drug out, but last year was definitely one of those times where harvest started and it was done in 6 weeks time. And it was done in a way that really clearly showed that we didn't necessarily have the flow of grain out there that we thought we would. In
Mhm.
addition, we knew that we had big demand. We had big export books on for corn in particular and wheat, not so much soybeans. Soybeans got a lot of the attention last fall, but we knew we had big demand. We knew we had big crush demand for soybeans as well. And so, like, you could feel that the market was basically working to bottom itself out and start to move higher. And honestly, there were a lot of people that were really surprised that soybeans broke out above 11 and worked their way up towards 12. To me, I didn't feel like I was. I didn't feel like, it wasn't really one of those things where it caught me off guard in that sense, simply because you saw soybean harvest happen so quickly. We knew that the moisture levels that we were seeing were well below normal. So, a moisture level of a grain that you receive at harvest time matters. If
Yeah.
you typically take 13% soybeans and they're coming in at 10, you just lost 3% of your yield into space. It is now, it'll come back down, east of you in rain or something like that later on, because that moisture has been so sucked out of those crops. So there's a lot of times in the physical side, if I know I'm struggling to get bushels bought, if I know it's harder for me to get bushels sold with some push or something like that, you can tend to really see whether or not the narrative matches the actual flow. And I always say cash grain or cash is like gravity. Like, you can't ignore it after a while. Like, the market can do all the things that it wants to do. We can have speculators come in. We can have agro tourists, like we'll call them, folks from the outside that want to kind of dive in. But cash is king. It will truly tell us what is going on. It's just a matter of kind of trying to wrap your arms around all of the moving pieces in today's world.
So In I mean, it sounds like, and I mean, my listeners and myself, we don't have a lot of exposure to the commodities folks. So this is super interesting, but it sounds like, the physical world, the cash market is going to signal whatever's happening first. Do we see meaningful moves in the futures markets that the cash market has not, that the physical product has not kind of revealed yet, that are important? I mean, is there enough intelligence out there as far as kind of what's going on the ground to kind of predict these movements before even the cash market
I think
does?
so. Yeah, I would say. I mean, to a certain extent, there's at least things that should happen, or there is, there's ideas. And you'll see it often. I'm not pushing what I write, but I'll say I am watching these things. And that's, this will give us a true sign of what is actually happening. Here's my thesis. Here's what should happen. If these things don't happen, or if these certain things do happen, then that is either, agreeing with, or showing me that I'm wrong in my idea. But yeah, I mean, right now, one of the biggest things I'm watching that I think could be a story later on, is the slow flow of grain out of South America. So it's not necessarily showing up in our market structure. It's not showing up in your spread structure. It's not necessarily showing up in basis as a whole in the nearby time frame. But if we see a continuation of lesser than expected movement, especially out of Argentina for corn and some of these other things, you will start to see it show up in the US corn market before anyone's really talking about it. And honestly, we've grown so accustomed to just accepting the government number as like, oh, okay, well, Argentina produced X amount of metric ton this year. It is what it is. And then the cash market is who tells us whether or not those are accurate. And so that's the biggest. Yeah. I mean, you can get a feel, and I don't want to steal the word vibe, from someone
Steal
else who was
away.
like, it's
Do it.
all, the vibe session and the this, that, and the other thing. But genuinely, in grain, you can get a feel a lot of times if you keep your head to the ground, if you're listening and watching and are able to kind of see the flow. You can get a feel for what is probably coming down the pike. And that's part of what I do as a merchandiser, is my job is to basically be like, okay, well, I'm buying at X. I think I can sell this. I can, lock in these spreads, trade this kind of basis, yada, yada, yada. And all of that is based off from, my expectations of how supply and demand is going to impact our overall market structure.
Wild. So what are your main kind of I guess metrics that you're watching? I obviously you just talked about flows, right? This
Mhm.
supply, where it's coming from. I know commodity traders are infamous for weather patterns,
Mhm.
droughts, right, or
Yeah.
excessive weather in whatever forms. What are some other things you guys look at to kind of gauge how the movement's going?
A ton of things. I'll try to keep it in organized order and not wander off too awful far. Like obviously weather is the biggest influential factor overall, hands down. And so it's fun. It's ironic in a sense because I wanted to be a meteorologist as a kid. How many 5-year-olds are like, I want to be a meteorologist when I grow up?
I think
Me,
I
because
wanted
I
to
was
be a
a
garbage
weirdo.
man at 5,
Right?
so
Did you really?
meteorologist
That's
is
great.
respectable.
Yeah. Like we probably should have both went into our. But anyway, so meteorology, weather, what the expectations are there and how it influences production matters. And unfortunately, there is a lot of blanket assessments and narratives that tend to circulate about weather in ways that aren't necessarily accurate. I spend some time just understanding agronomics, what goes into producing a crop. I have a couple of customers of mine. I have one in particular that holds one of the national records for dryland crop production. So I'm, like he's forgotten more about what it takes to produce a corn crop than I'll ever know. But it is nice to be able to kind of lean on someone and say, hey, what are you seeing out there for conditions? Like, what are the things that give you pause? Or do you think we really do have this sort of potential for record production, yada, yada? Beyond that, it's basically everything. I hate to just kind of gloss over, but we're watching how currency is trading. Right now, everyone loves to say that the stronger dollar is super bearish to commodities. Of course, it makes our commodities more expensive to the global market. Part of the reason that we had such large corn export figures, like we had record large corn exports last year, we had very large wheat exports. Part of that was because our currency was cheap and it provided us the ability to sell into the global market a premium product at a discount because of how the dollar was trading. So we obviously are watching that. We're seeing, more of a rally in the dollar, and that's going to weigh heavily, especially upon wheat and potentially corn. We watch geopolitics, like we're watching the whole entire situation between Russia and Ukraine still. I feel like I'm one of the only ones that is genuinely watching this and saying, how are we still insisting that crop production is growing when the logistics, the fuel shortages, all of these things are continuing to kind of pile up? So you're watching how the geopolitical realm plays out. Obviously, the situation in Iran mattered mostly because of freight. Like a lot of people misread it as bullish commodities or bullish grains because the Black Sea situation was bullish grains. Two very different scenarios. The Middle East is a demand sector, the Black Sea is a supply sector. And so you had two very different sort of setups, those types of things. So really, when it comes down to it, for me, every day I'm watching, government policy, how trade looks, what you're seeing from a geopolitical standpoint, what we have going on for weather. Obviously, domestic policy, RFS, if you're going to have a renewable fuel standard increase, if we're going to see more blending, other countries' domestic policies, Brazil's going to 32% ethanol from 30%. What's going on in the EU with their deforestation regulations and rules that they had. We had a whole entire thing for a while where soybean meal rallied because it looked like the EU was only going to be able to rely on the US as a provider of soybean meal in the short term due to all of these regulations. Like there are so many moving pieces. And as we've become this global, sort of, it used to be we were the breadbasket, right? The US, I say we, the United States was the breadbasket. We were responsible for exporting into all of these global epicenters, and the US was the only thing that mattered. Not anymore. It's a global market, in a very, very big way. We have a lot of growing production out there in different spots too, as well as growing demand. And so, yeah, it feels like you just basically, you name it, I'm probably paying attention to it in some way, shape, or form.
That's a little more complicated than I was thinking. I thought you guys are
I think
being
a lot of people.
does it rain this month or does it not? No, but that's super interesting because, obviously my focus, I run my hedge fund and we're, S&P stocks typically,
Mm-hmm.
right? And individual stocks and there's always a lot that can influence certain things, but when you're talking about so many uncontrollable factors, which
Yes.
the entire market is full of things we can't control, but you guys have this mother nature element. Number one, you have on top of it this much larger global influence of supply and demand. When I'm looking at whether I want to, buy SpaceX or not, right?
Yeah. Yeah.
I don't think anybody cares what Europe has to do with that or,
Right.
whatever, unless somebody has a major competitor. But you guys on the commodity side of things, I mean, this is wild. So, first of all, I should know this, but I don't because it's not my specialty. Is the US when it comes to those types of commodities, soybeans, corn, grains, everything in that space, are we net exporters? Do we import any of this? Are we buying from anybody else, or do we produce so much?
Yeah, we're basically we're net exporters. I shouldn't say basically because it's very clear that we are net exporters. We exported over 3 billion bushel of corn last year, or this current crop year. We're in the process of exporting over 3 billion bushel. We'll probably import, I think the USDA has us down as importing like 25 million bushels, 30 million bushels, give or take. And so we do import some. We always do. Like a part of trade, obviously, is, I've got a boat in Brazil that we can throw some soybeans on and they'll hit Southeast ports cheaper. You know what I mean? Like we tend to forget that, there are parts of the US that are actually harder to hit from the Corn Belt, like there's a mill in Florida that everyone always gets really worked up about because they bring in EU wheat. Well, of course they're going to bring in wheat from Poland. They were set up specifically to do that. And it's a lot more difficult to get wheat from, the center of Michigan to the panhandle of Florida or whatever. Like, it's just, there are some situations logistically that take place, and we do see it, to where there's a bit of an ebb and flow, but the ebb is much greater than the flow, or however you want to put it, in that sense, where we send a ton more out into the world market than we take in. And taking some in isn't terrible. It's in physical grain, you have different quality, like you have different quality sectors, you have different quality ratings, you could say, and different things that you can do. You can buy grain cheap. Let's say you can buy cheap wheat out of Canada. If you're a wheat miller in North Dakota, you can import some cheaper wheat and from Canada, bring it in, or maybe you bring in some off spec wheat and blend it into your good stuff and stretch your supply. Like, there's a lot of little things like that where we will see some importing, and it's as important to me as the export side, though a lot of times people will get really worked up about it, where it's like, oh no, this is the worst thing. No, the USDA has at least 25 million bushels of imports factored into corn, soybeans, and wheat just about every year. And it's not, horribly unusual to see that kind of flow happen.
So, on that topic, how does the U.S. product compare globally? How like I don't even know what the categories are of the quality of corn or wheat, but I mean, and I don't mean to bring up these touchy topics, but
No,
obviously
not at all.
U.S. detail, I mean, there's and who knows how substantiated any of this is, but the US, we have this reputation of genetically modified everything, right? Whereas some of
Mhm.
these other countries, they say, well, we don't, and so our stuff is healthier for you. How does that all play in? And
Yeah, yeah, and I mean, there is a factor there other than the GMO. There's certain trade agreements, or there's certain like there's certain traits that are allowed. So basically, the U.S. isn't the only one that has GMO crops. Brazil, Argentina, the EU obviously has their own rules and things like that. But you will see GMO crop used elsewhere, Ukraine, Russia, wherever. There is not a commercially available genetically modified wheat crop. Now, they've worked on it, a Roundup Ready wheat or something like that. There have been, and you will see every now and again a report of where did this come from? Maybe like we saw one like 5 or 6 years ago, I think in Washington, and then something like that in wheat. But there is no commercially available, commercially approved, anything like that genetically modified wheat crop. There is soybeans. You have a Roundup Ready bean. You have other traits that are introduced and things like that into soybeans. Same thing with corn. You have all kinds of different traits that are available in corn. That doesn't mean that they're the only things that are available. The U.S. does offer and sell a lot of non-GMO organic products. Non-GMO is not organic; they're two different things. But you have different types that you can get into. We used to, in my former company, we did couple million bushel a year of food grade beans that we exported to Japan specifically for tofu. And so the US does have, we do grow some genetically modified crops, but so does everyone. Basically, most everyone, I should say, not everyone, but most of the world does. We've seen it. There's different protocol and procedures in place. You have all of these countries have already agreed on these traits. It's all been put through. You can't ship as a farmer a trait or a crop that is not approved into the export market. And we do see it. The U.S. tends to be better. Maybe, and I'm partial, obviously, but we do tend to be better at identity preservation and making sure that what you order is what you get. We did see here just recently, Brazil and Argentina both struggled with some rejected traits of soybeans that they have found in meal that went into the EU. So we're not the only ones out there that have the GMO crops, but really the world grain trade has systems in place and things to make sure that whoever wants a specific product is able to have access to it, if that makes sense. Like if you want
yeah,
non-GMO corn in the EU, you can buy all the non-GMO corn that you want from the US or Argentina or even Ukraine, whoever. But you can also buy anything that is genetically modified as well if you'd like it, and it's cheaper.
That is wild because, again, we're talking about a commodity, right? That's in
Mhm.
something that most everybody consumes every day
Yeah,
in some form or another, right? And so this is, I mean, I don't even go to the gas station every day, right? That's a
yeah,
every couple of days kind of a thing. And so this constant, I mean, I'm so fascinated by the commodity discussion because it just, I'm so busy on all the other equity stuff. I just never look at the commodities more than just the high level view. And so this is really interesting to hear. I have to ask the other question. My wife,
yeah,
totally celiac. How has the gluten
yeah,
the gluten crowd? I mean, did that, because that was, I mean, now everywhere we go, my wife says, she like has actual celiac, right? And so
yeah, yeah, yeah,
they always ask, they say, is it an allergy or a preference, right? So which indicates that there
yeah.
was this trend, right? There were
Mhm.
people that couldn't consume it, and then there were
Yes.
people that didn't want to
They just
consume
didn't
it.
want to. Mhm.
And so how has that impacted, or has that just been a
Mhm.
blip on the radar in the wheat grain market?
It's impacted things, even if just from a sentiment standpoint. But it has impacted food demand. Like we've seen food demand basically for wheat plateau over the last decade or whatever. If you look at wheat in general, just the wheat demand in general across the U.S. for food, is basically it's just not growing. It's gone backwards a little bit. We have seen it in different demand sectors that are out there. For me, I handle soft wheats, so it's the other thing, just to not confuse the entire listening audience. But there are three different, four, five really, but three major wheat classes in the US. And that's why you have your Chicago, Kansas City, and Minneapolis wheats. And so Chicago wheat is your soft wheat, your soft red, and your soft white. That's your fun wheat. So, like, that's the wheat I handle. That's more, we say fun wheat. It's your donuts, your cakes, your cereals, like all of the good stuff.
The
The good
necessities.
stuff. And then you have your Kansas City wheat, that's your hard winter wheat. And then you have your Minneapolis, which is your hard spring. And so, yeah, each one, excuse me, has had its own sort of impact from gluten, celiac, changes in diet. Like right now, we're working on through the GLP-1 craze and what that means. It's impacting dairy in a good way because of whey protein, but it's impacting, grains, corns, things like that in sort of negative way. And so, yeah, we're definitely seeing it. It's not huge by any means, but there is an impact there.
What are the what is that side of things doing to I mean, are they just, is this a common enough thing, whether, GLP-1s, right, or celiac or whatever might happen? Do the farmers and does the industry kind of just ride the wave? Are there innovations that they're
Yeah.
looking to, like, how does that progress, right?
A little bit of both. Yeah, we ride the wave. I mean, we have to, like, the earliest that I can remember there being a wave to ride, I think was, I'm trying to put my finger on it exactly, but we'd already had the conversation about high fructose corn syrup, circa 2010. And so that impacted corn demand. Everyone wanted to move away. And then you saw it. We had that conversation with the Maha movement to the MHA there, where they were going to move us away from corn syrup, right? And so you saw this whole entire conversation for a minute last year where everyone was like, "Oh, we're going to lose 1 billion bushel of corn demand because we're going to do away with corn syrup or whatever that may be." And we're not gonna, like, obviously we're not going to completely do away with corn syrup. Could that reduce demand as a whole? Potentially. But you could also argue that the increased demand for protein meats in particular, especially your cheaper white meats like chicken and pork, have helped increase corn demand elsewhere, right? You're feeding corn to animals versus putting it into a plant in Illinois that turns it into syrup. So there's some give and some take, some yin and yang. But it is one of those things where it's just another influencing factor we have to watch. Like, what is overall human demand going to look like for our crops as we move ahead? And so, yeah, it ebbs and it flows. I've used that phrase and I will continue to probably way too many times, but that's basically that's just like the tagline for commodities. So we ebb and we flow. Like we're just you have to roll with it as a farmer no matter what. Like you don't have a choice. You can't, I mean, you can keep your crop out of the pipeline, obviously, but really beyond that, you're a price taker. You just kind of have to take whatever unless you're able to produce it into something else. And so yeah, it is something that we watch and pay attention to. It's just another factor that influences price and movement.
The commodity game is such an interesting one because when you see things like oil prices, right?
Yeah.
And gas at the pump, the actual price at the pump metric there. I mean, it's such and the average person that doesn't follow markets closely, in this kind of detail, will look at price per gallon of gas, right? And
Yeah.
and everyone kind of has their threshold. If we're like in the $2 range, you're like, okay, great. If we're in the $4 range, we're like, well, this is terrible. Something's wrong, right? And so oil has this, and gas prices specifically have this kind of buffer they kind of have to stay in, right? Where like the long-term price really is actually going up very, very slowly, right?
Mhm.
Whereas on the food commodity side of things, um, it seems like that's more tolerant of price hikes with less need to revert, I guess, to the. I
Mhm.
mean, every market goes up and down, of course, uh, um, but I mean, I feel like gas could easily be $10 a gallon right now
Mhm.
versus, we see a loaf of bread or whatever kind of wheat product that used to be 99 cents and now it's $5,
Yeah.
right? And so it seems more tolerant of price increases. Is that true? Or people, I mean, is there always that topside pressure to kind of push
It
against
seems
those?
there is from a retail side. Unfortunately, that doesn't seem to translate through to the farmer side. It's I think the farmer receives, and I don't even want to use how many cents because I'll probably say it wrong, but the farmer receives a very, very small portion, obviously. I think in it like a loaf of bread, I think the farmer's portion of it's like 12 cents or something like that. And don't quote me on that. I'll have to double check and make sure I'm not embarrassing myself by saying it, but it's a very small amount. And if you look at, I've been doing this for 21 years now. And yeah, when I started in '05, I could grocery shop on a budget of $50. And now, of course, it's three times that now we're more people or whatever, you know what I mean? But like still it's quite it's a lot more expensive and it's not going backwards. And most of that your cost at the grocery store, unfortunately, people will turn. A lot of times you'll hear it hit the news cycle like gas is expensive, food is expensive, and it just so happens to have come right at the same time that maybe corn has rallied for the first time in 2 years to the highest level that we've seen. Like this year it was the highest level we've seen since 23. All of a sudden everyone's talking about the affordability crisis and what that means for your
Mhm.
costs at the grocery store. Well, the grocery store prices typically are increased or the cost increase is coming from not necessarily the whole commodity, though they'll say it is. They'll say, "Oh, the wheat prices are up, so we have to raise our bread prices." When really it's just a matter of they have the ability to maintain the margin projection that they have, the margin target, like a seller of goods, that turns a commodity into a product, because a commodity is not a product that can be used by people. You can't just go to the store and buy corn and use corn. Like it's not sweet corn. We're talking commodity corn here. It's a different sort of thing. The people that turn the commodity into a product that's usable for the consumer, they have a margin that they need to maintain, and they will maintain that margin no matter what. And then when the price sets back, they're going to maintain that heavier margin because they can point to how their margin was squeezed in the beginning of the rise in price or whatever. But honestly, the majority of the cost or the bulk of the cost of groceries going up is being driven by your increase in labor, your increase in packaging, your increase in freight costs, your increase in just owning the grocery store, like all of these other factors at hand, or owning the factory that's producing the product or whatever. You look at a grain elevator, like I think of that in particular, like our insurance costs at the grain elevator I merchandise for have tripled in the last decade. we are still making the same margin. We don't have the ability to say, well, I need more money.
Yeah.
Whereas like a grocery store or a different business, they're going to tell their shareholders, oh, well, we had to raise the cost of our product because our cost of doing business increased. Well, we don't have that option on the grain side. We're just here.
Yeah. That's
But you will see it rise and not go back at the store, unfortunately, for that reason.
Yeah, and that's a tricky thing because obviously the futures markets really came about to kind of
Mhm.
hedge and manage the risk on the commodity itself. But if the
Yeah.
commodity itself is not the big, I mean, it's a shame we can't buy futures on like the labor market,
Right?
and
It would
hedge
be
against.
nice. Or insurance. Like at this point, I'll buy a call option on my insurance costs for the next 10 years because I can guarantee you it's going to pay for itself, or it should pay for itself in a way. I mean,
Mm.
we're going to insure our insurance rates at these point. At some point, there's probably a business out there that someone's going to think of now, and they're going to
I mean,
call
I
me.
I think this is the prediction market, right? Let's
Right?
make money
Yeah.
on the prediction market saying insurance prices are going up, but that is wildly interesting. And so, what part of your day consists of trading the futures markets, and what part of it is actually managing the relationships between the producers and the buyers?
It all is kind of comes together, on a, not to give you my full, get ready with me or my full day schedule by any means, but my day starts about 5 a.m. when I get in the office and just kind of check my positions and make sure overall that all of the entities, that I'm working with, that we're what we figure we have hedged, and what our long and short is supposed to, because we have all of these moving pieces constantly. Just making sure that what is supposed to be there position wise is there, and so I would say I start my day, the first few hours of my day are just kind of assessing, where I'm at, what kind of risk we're looking at, what I feel the market's going to do, and whether or not there's anything actionable that I need to be doing right away. Like a week ago, perfect example. And it didn't end up really working the way I thought it would necessarily, or I guess it did. Now I'm looking at the spreads, but I wanted to get my wheat spreads out. Most of my position was sitting in the September, you know what I mean? And I feel like there's some quality problems and things that should be bullish spreads going forward. So I start my day initially getting my spreads rolled to where I want them rolled, or whatever. After that, it's pretty much just how if the farmer wants to communicate, if the end user is looking for something, if something pops up special throughout the day or whatever that I think people need to be paying attention to. Pretty much while the market is open, we are trading. But whether it's just a contract here or a bunch of contracts there is trade happening, conversations happening, and just kind of always something going on. If futures are poor, then basis is probably providing opportunity, those types of things. But yeah, so the market for us, grain in particular, obviously is open overnight until about 8:45 Eastern, and then we have a little bit of a break. And then we're reopen again until about 2:30 Eastern. And so yeah, throughout that entire time from about 5 to 5, I am actively doing something with this market.
That's there's this big push to make and more equities are trading 24 hours a day. And
Yeah.
I'm like, why are we doing this, guys? I did some FX trading, decades ago, and the whole 24-hour market and waking up at whatever hour in the, early
Yeah.
morning or even middle of the night to see what the European markets did. I thought I got to get in the equities markets. I need something that closes that I can just get
It's
up and be
done.
ready for.
Yeah.
But
Yeah, that's commodities, and they did try. I mean, there was a minute where we were trading 23 hours a day. It really took away the volume, the liquidity. Like it just you don't have as much excitement when you're open like that in grains, I guess. It's not bad from a risk management standpoint. If I buy grain at 4 in the afternoon, it's nice to know that it's hedged and I can go to sleep. But
yeah,
yeah, it's a pain in the neck. Like I haven't had a good night's sleep, I don't think, since the Russian invasion of Ukraine. Because that just blew, for lack of a better term, it just destroyed our entire market from where you went to sleep when you left the office at 3 o'clock that afternoon to like 11 p.m. that night. Everything that you had anticipated completely went differently. The market inverted. we had basis collapse, wheat went nuts, like all of these things. And so yeah, it's definitely one of those where you're sleeping with one eye open, hoping you're not missing anything that's
Uh,
happening.
us traders, we certainly put ourselves through it, and
Right.
I,
That's I have to
I
tell myself though, like you're not saving life. Like there'll be times, where the anxiety will build up or something will, and I'm like, chill out. You are not in an emergency room. You are not saving lives. You are literally just making sure that someone has wheat. Like it is not that serious, but there are times where it can be.
it
Or it
can get a
feels like
little,
it. I shouldn't say it can be, but it feels like
yeah,
it
yeah, it can get a little wild for sure.
is.
That is super interesting, and I think that I know that my listeners will definitely enjoy this episode because we just I mean, this is such a involves everybody. Not as many people watch this kind of a thing,
Yeah.
and so this has been super interesting. And tell we'll include all the links, but just tell people kind of generally. I mean, obviously you've got an account on X, which is how
Yep.
we became associated here. But where else can people kind of follow your research and know what you're up to?
Yeah, so I am on X, Twitter, Goddess of Grain is where I'm at there, and then I'm on TikTok as well. I tend to do just an afternoon update that I always say I want it to be quick. It's never quick, but it just kind of runs through everything there. And then you can check us out on Substack too. And my husband Carl is my partner in life and in business. You can pray for him, but he's got a background too. He did this. We actually met. He was managing an ethanol plant, and we got into a fight. I thought he was a jerk. It was fun. And apparently he just that's and the rest is history. But he came and joined me, so he puts out commentary daily. I tend to write a once a week column. I call it Sunday Scaries. It's just kind of what's keeping me up or what I'm watching each week. And you can check that out on Substack. Goddess of Grain Substack or Consensus is what it is on that side there. Or you can just check us out on the web, consisag.net, and you can sign up for the content there as well if you would like. But yeah, just I'm kind of everywhere and nowhere all at the same time.
All at the same time. Thank you, internet.
Right.
Well, that is awesome. That is this has been beyond interesting for me, and I know my listeners will love this because this is just I love the spaces that don't get enough attention that should. And obviously there's lots of commodities traders out there, but they're just not as prevalent as so many other ones. And it's such an interesting spot and an interesting space. And as it turns out, there's probably way more things to look at than in the typical equities markets
Yeah.
on what you have to track, right? Is everybody excited about AI? Let's buy some Micron, whatever. But like you guys are just man, that is a big thing. So luckily though, as we know, hopefully in the corn and the grain and the everywhere else market, we we all like to eat, and fortunately for you guys, we have to. So
Right. It
may
is job security. That's why if you know how to trade physical grain, there's no one else out there that really likes it enough to do it, I think, anymore. So I do feel good about that. I know I'll have something to do for the rest of my days at least.
Yep, AI is not taking your job, so you're
No, Claude, he tries. I lean on him every now and again. Like I do lean on the AI, but they definitely the physical side of grain is something that even AI is like, no, thank you.
I'll pass.
I'd rather not.
I don't need grain. I'm a computer.
Right,
Uh,
exactly.
That's great. Well, Angie, thank you so much for joining us for an episode today. This has been super awesome, and we will definitely keep in touch. And I'll make sure to post all of your links so that people can kind of watch what you're looking at, what you're doing, and and keep an eye on it that way. But thanks a million. We will have you on absolutely again in the future.
Thank you so much. It's been fun.
All right. Thanks.